clear, if everything is going on fine, just let me know through the comment box, right? Thank you guys. Thank you my YouTube fans. Thank you for the follow, for the subscription, for the likes. Thank you guys. Appreciate your support. And we are live right now on YouTube, and let's just copy the link right now so that we can set this live streaming link to our traders who want to join us on the YouTube, right? So we are live on YouTube, and then I'm copying the link right now. I'm gonna copy the link, and then I'll see if the voice okay. We are good to go on YouTube now. Here we go. I'm gonna post the link right now on the Telegram group, so you can get access right now. So the link is right now in the Telegram group. So, okay, you can check out the link if you prefer to watch this live stream from YouTube, and then you can ask questions from YouTube, right? So great, we are good to go. So guys, it's a beautiful day. It's Friday morning, and a happy new month to you all. Happy new month to you all. I wish you a beautiful month, wonderful month, profitable month, right? So as usual guys, you can start suggesting any asset you want us to analyze in this live stream, right? Start making a suggestion, start dropping your suggestion. Your suggestions are welcome, right? Start dropping your suggestion. Let's go through the market together, right? So I'm waiting for your suggestion. So the first asset we have on the suggested list today, it's a USD Canada. So we have the USD Canada. Please traders, whenever you make a suggestion, always submit your suggestion with your country, right? Let us know where you are streaming from, right? So we have USD Canada suggested by Sammy. So Sammy, no, tag your country. Okay, we're from Nigeria. Happy new month to you too, right? So the first asset on our list today is the USD Canada, right guys? You guys can make a suggestion of any asset you want us to analyze in this live stream, and then we're gonna go through, right? So we have the USD Canada. What is going on in the USD Canada? Actually, the members, I believe, a lot of members in the Telegram group, we are already having a lot of profit rolling in right now on USD Canada. We have a great profit. We are still in the charting trade. We are still charting the setup, and we are accumulating more profit as the market keeps on breaking all the way down, right? So if you miss the opportunity, don't jump into the market, don't chase the trend. So what you're gonna do right there if you miss the trade is you have to exercise patience and then wait for a pullback. Okay, whenever I can see a pullback, I will always share this entry in the Telegram group. So if you are not in the Telegram group, then it means you are definitely missing out. All you have to do right now is to join the Telegram group. So follow the instruction right here and join the Telegram group. Alternatively, you can use the link in the description of this live stream on YouTube to join the Telegram group. Thank you guys. So guys, we have USD Canada on our list. That is the first currency suggested by Sammy, a trader from Nigeria, right? So guys, if you are new in the channel, you are welcome. Kindly follow, subscribe, and you have the right to suggest any asset you want us to analyze in this live stream, right? So let's start dropping our list. Let's start dropping our suggestions, right? Let's go. We have 5 more minutes to start the live stream. We're gonna start this live stream by 12 p.m. In the next 1 hour, we're gonna put an end to it, right? So you are welcome traders, and please traders, share this live stream with your followers on the YouTube, with your followers on TikTok. Share this live stream. Let's go viral, right? Let's go viral, traders. Let's go viral. Share the live stream. Let's go viral, right? Thank you guys, right? Thank you guys. Share the live stream. Let's go viral. Share the live stream, right? Thank you guys. Share the live stream. Let's go viral. And make sure you like the live stream on YouTube. Like the live stream. Put a comment down. You can use the chat box on the YouTube channel to make a suggestion of any asset you want us to analyze. As well, you can make a suggestion on TikTok, right? Thank you guys, right? So we have the first asset is USD Canada. So guys, take advantage of your early attendance to the live stream to suggest any asset you want us to analyze before the live stream get congested, right? So start dropping your suggestion, right? Right, let's go. Tap, like, follow, subscribe, share the live stream. Let's go viral, guys. Let's go viral. Right, let's encourage more viewers to join the live stream. Right, guys, let's encourage more viewers to join the live stream. Let's go viral. Okay, thank you. Share the live stream, right? Make a suggestion of any asset you want us to analyze in this live stream, right? Waiting for you guys. Waiting for you guys. Let's go, let's go, let's go, let's go, let's go. Waiting for you guys. So I also have my own suggestion, right? So the second asset on the list is sugar. So I'm currently monitoring sugar, right? Let's go, let's go, let's go, let's go, let's go, let's go. Let's go, let's go, let's go. Make your suggestion, make your suggestion, make your suggestion. And then that's where I am monitoring soya bean. Right, let's go, let's go, let's go, let's go. Drop your suggestion, drop your suggestion. Let's go, let's go, let's go, let's go, let's go. Let's go, let's go, let's go, let's go. Drop your suggestion. Right, let's go. Drop your suggestion. Let's go, let's go, let's go. We have 2 minutes to go. Make your suggestion. Use the comment box. Use the comment box to suggest any asset you want us to analyze in this live stream. Right, use the suggestion box. Right, guys, use the suggestion box. Make your suggestion. Right, use the comment box to suggest any asset you want us to analyze in this live stream. Right, do that right now. So we have USD yen by Sammy, USD JPY by Sammy, right? That's USD JPY, right? Let's go, let's go, let's go, let's go, let's go. Make your suggestion. Make your suggestion. Make your suggestion. Make a suggestion. We have 1 minute to go. Let's go, let's go, let's go, let's go. Let's go, let's go, let's go. We are about to start the live stream. We are about to start the live stream. We are about to start the live stream. Right. By the count of 5, we are gonna start the live stream. We have the 1, 2, 3, 4, 5. Okay, guys, so now we can proceed further. So today we are going to go through some assets. We have USD Canada suggested by Sammy. I have sugar, soya bean, I have orange juice, US oil, I have platinum, I have gold and silver on my list. And Sammy also suggested for USD paired against the Japanese yen. So guys, the first asset we're going to be going through right now is the USD paired against the Canadian dollars. So let's go through this asset. USD paired against the Canadian dollar. So this is what we have right now on the 4-hour chart. And let's check on the day chart. This is what we have on the day chart. So let's try to remove all these drawings right here. All right, let's try and remove all these drawings right here so we can have a clean chart. Right. Okay, good. So now let's navigate back to what we have based on the day chart. This is what we had on the day chart. If you have been following my analysis, you're going to recall when I gave a short setup idea on this asset. I told you, we're going to be looking out for a break of the key level support, which acts at the price of the 1.36519. You can see when price broke this level structural formation right there, this was being broken on the 24th of November 2023. That was last month. That was last month because today is the first day of December, so it's not last month. Price broke right here and we had a bearish breakout and we had a retest. So we made the first entry short right here. And I told you guys based on this setup strategy right here, and I shared this in the live stream we held on this profile, and which a lot of traders took advantage of this setup. So guys, so what are we looking out for on this asset currently right now? As we can see yesterday, I told you guys, I said, price is finding it difficult to break below this swing structure right here. Fortunately, price eventually broke this level that was before the end of close of price yesterday. You can see we got a minor structure right here. This level acted as a potential support for price, but yesterday, Thursday, price eventually broke this level, but it was within my volume. But anyway, price did close below this swing structure right there, and the price is currently gravitating all the way down, which means we are still riding this trend all the way down. So based on what we have right here, there is a possibility price could still make a pullback. Price could still make a pullback to test this structural formation right here. Okay, price could still make a pullback to this level, right? So for those of you who want to join the trend, for those of you who missed the trend, the question right now is where should you look out for trade entry in this market? So if you miss the entry based on what we had in this downtrend, the best thing to do is to wait for a pullback. Don't jump into the market. This is what I always emphasize on. Don't jump into the market. So what we're gonna do right now is we're gonna try to capture the swings, low highs in this market. Like I told you yesterday, I said I already placed a stop loss above this structural zone right here. Right, I already trade my profits. I trade my profit right there. So if the market should bounce up, I have nothing to lose again. So the key idea right there is I want my trade to keep on running into profit. So that is the key idea right here. And I told you guys I'm gonna be I had a sell limit order posted around this zone, but the market failed to execute my sell limit. So I missed this entry right here based on a few pips away. Right, I missed this sell up right here. Actually, this was where I placed my sell limit. I placed my sell limit around this zone right here. So based on this structural high right here, let me just get this off right here. So I placed my sell limit right at this zone right here. As you can see, the market failed to execute my sell limit with some pips away. So I missed the entry right here. And just because I missed the entry right here does not mean I have to jump into the market. So I don't want to do that. I place a sell limit right here, so I end up losing the second entry. This could have been another second short entry for me, but the market refused to execute my sell limit order. So this is one of the disadvantages of using limit orders or stop orders. So sometimes the market could execute your limit or stop orders, and sometimes you could miss the rally. Like what I did right here, I actually placed a sell limit order right here, which was being executed. You can see that. But right here, my sell limit order wasn't executed, right? So it was just like some 5-6 pips away. So I missed the entry right there. So I'm waiting for another pullback. So based on what we have on this market right there, so let's try to see if there's a way we can try to capture the swing low highs in this market. So I'm going to tag this right here as a swing low high, and I'm going to fire it all the way up. You can see that. So based on what we had right here, you can see it. So I am trying to capture the low high swing right here and the low high swing right here, likewise the low high swing right here. So if the market can make a pullback to this structure right here, that would be nice for us to make a short entry. So I'm going to be looking out for a way to place a sell limit order right here. Okay, but now I haven't placed a sell limit order. I'm still monitoring the market to see what the market has to offer. I want to see the kind of momentum we're gonna have in this market structural formation right there. Maybe the market is gonna keep on dropping down, right? And as well, I don't want to make any sell limit order based on Friday, because today is Friday right here. Now today I don't just want to make a sell limit order, right? So actually want to see what price has to do before the end of trading activity today, right? So my trading decision is going to be acting, it's going to be for next week. So next week, so let's wait for what price is going to make today. Maybe price is going to break low. So next week, I'm going to be looking out for a pullback. So if you can see a pullback, just like the pullback we had in this bar structure right here, this was a series of pullbacks. So next week, the question is, can we have a pullback to this structural formation right here? So this is what I want to look out for next week in order to add to my short position and continue this downtrend. So the question right now is, where is my take profit target? Right? So I told you guys, I have some key level structures I'm monitoring on this asset. So based on the key level structures on this chart right here, You know, I'm a swing trader, so I tend to look for an aggressive long-term trade setup. So first I have my TP1 right here based on the weekly chart. I have my TP1 right here. I got my TP1 right here. And I got my TP2 right here. Right? And I got my TP3 right here. So these are the zones I am looking out for to keep on taking some profit or trading some profit, right? But it all depends on what the market has to offer at this key level structural formation right there. So these are the three zones I am monitoring this market. So which means before I'm going to be looking out to close this trade right here, I have to be able to achieve at least a target to the TP1. So if I can see the momentum is still strong in this downtrend, if the momentum is still strong in this market, then I'll keep on trailing my profit all the way down, maybe to TP2, right? TP2, TP1. This was what I did exactly on US oil. If you have been following my analysis right now, you're gonna see this were exactly things I did on US oil. So this would be my TP3. So I'm looking out for a long, short setup on this market right here. Want to see it breaking all the way down. So that is my view on the USD Canada, right? So if I'm going to be mentoring my take profit right from my point of entry right here and my initial stop loss, at this zone right here, or to this structural formation right here, there's going to be like a 2.8 risk to reward ratio. And then based on the TP2, this would be almost 4 risk to reward ratio. And then based to TP3, this is going to be almost 6 or 5.9 risk to reward ratio. So anyways, before I'm calculating my risk based on my first entry right here, and you all know I'm gonna keep on adding to my positions in this market. So I could end up scaling up to 5 or 6 trades right here, or maybe minimum of 4, right? So I'll keep on scaling and adding to my position as the market keeps on going down. So this is how I trade, as a swing trader. I keep on scaling up to my trading strategy, my trading entries on this asset. So this is what I can see on USD Canada. So I'm still supporting a more downtrend on USD Canada, right? So in summary, I want to see price make a pullback to the broken key level structure right there in combination with the descending trend line all the way down, right? So you guys can try to screenshot that. If you are trading the USD Canada, try to screenshot that so that you can have an idea of the next potential swing structures in the market, right? So I'm going to give you guys a few seconds so that you can screenshot that before we proceed to the next asset in this market, right? Get that done right now. Okay, guys, are you done? Right. And there's something I want to show you guys. You can as well use just like what we did right here. I think the market actually got a rejection from the swings right here all the way to the low structural formation right here. The rejection came at a 0.618. Let's move this chart. So based on what we had right here, the entry which occurred right here at the bearish engulfing candlestick right here was a retest of the 0.618 Fibonacci retracement level, right? So I was trying to just target the 0.78 because I'm looking out for a better short entry, but I eventually missed the short entry. So that is what I have on USD Canada, right? So now let's go to USD Yen. USD Yen on the list, suggested by Sammy. If you are watching from YouTube, you can as well make your suggestion if you are watching from YouTube, any asset you want us to analyze in this live stream. So let's go to USD paired against the JPY. So here comes the day chart of the USD paired against the JPY. I gave analysis about this asset yesterday, and I told you guys, if those of you who are looking out for trade opportunity on USD Yen, you have to be very careful. If you are charting USD paired against the Canadian dollar, then I see no reason why you should be charting USD paired against the JPY. Because I know some traders are going to be looking out for long. What I mean is, if you are longing USD, this is USD Canada, right? If you are longing USD Canada, if you are shorting USD Canada, right? And then you have USD JPY. Let's get this to be D, so that you guys can understand what I want to explain right here. If you are shorting USD paired against the Canadian dollar, and then you look out to long USD paired against the JPY, you are trading against yourself. Don't do that, right? So what you should be looking out for is a way you can short USD against Canada so that you can have the same market correlation. if you are shorting USD down on Canada, you should be looking out for a way to short USD down on yen. So if you are trying to go uptrend, it means you are shorting USD on Canada and you at the same time you are longing USD against yen. That means you are trading against yourself. If you make profit on USD Canada, USD yen will clear off the profit. And if you are making profit on USD yen, USD Canada will clear off the profit. Because it should be following the same direction. You should be following the same direction. If you are going down, be going down on other USD yen or USD yen. If you want to go up on the same assets, right? So if you try to go against the directions right here, you are putting yourself into risk. That means you don't understand what you are doing in trading. That means you are trading against yourself. So if I were you, since I'm charting USD paired against the Canadian dollar, I would be looking out for a way to chart USD paired against the JPY. If I were you, right? So for those of you who want to make a long entry and you have a short position on USD Canada, then it means you don't know what you are doing, right? Never do that. If you do that, you are trading against yourself, right? So if I were you right now, this is what I'm looking out for. I want to see a test of this structural formation right here and the rejection on the way down, a breakout so that I can make a short entry on USD yen. So that is my that is my view, that is my plans, because I already have a short entry on USD Canada. So I want to be looking out for a potential trade set up on USD paired against the JPY in a downtrend. So right from the high swing right here, I fire my Fibonacci retracement to the low structure right here. So we already have price trade into the 0.5 Fibonacci retracement level, right? So some aggressive traders could have made a short entry right here. If you want to make an aggressive short entry on this market right here, some traders could have made a short aggressive entry at the 0.5. But I prefer to have a more confidence factor right here, maybe a test of the 0.618 to execute a very small position size. Or maybe if you can have a chart pattern supporting this bearish signal, maybe if you can have like something like a double top, they will be nice. This would be nice, right? So let's check the 1 hour chart. So based on the 1 hour chart, we already have a double top, but I still want to see price testing this trend line. I want to see more confidence factor. Price need to test this trend line, and I can see a strong rejection all the way down. Of course, some traders could have made a short entry based on the strong rejection right here on the 1 hour chart. You see that? And some traders could be looking out for a breakout of this double top neckline, which has been formed on the 1 hour chart, right? But unfortunately, I do not trade the 1 hour chart. So I want to see my pattern forming maybe from the 4 hour chart. So based on the 4 hour chart, is what I'm looking out for. I still need price to give me more confidence reasons to look for an aggressive entry. If I want to be looking out for an aggressive entry in this market, I want to see a strong technical reason, right? So alternatively, I could be looking out for price to make a pullback to this trend line, find a strong rejection all the way down, and to break the neckline structural formation right there. Give us a pullback, then all the way down. You can see that? So that are the things I'm looking out for. And this could be a trade for next week. So this could be a trade for next week. So in summary, the safest way to approach this asset is if you can see a break of the lower band of this structure of this rising channel, that would be nice, right? If you can see a break of this rising trend line, you can see the trend line. If you're going to zoom in, you're going to see we have a rising band, rising channel right here. We got a low right here. We got a double bottom rejection. Double bottom was being carved right here as well. We got a double bottom being carved right here as well. So price is currently gravitating at this median right here. So let's see price gonna break this level for more downtrend on USD yen. So this is my expectation on USD yen. So I'm supporting a downtrend since I'm shorting USD paired against the Canadian dollar. So I'm supporting a downtrend on this price chart right here. So that's my view on USD paired against the JPY. Okay, someone said, what is the difference between aggressive and conservative entry? All right, the difference between aggressive and conservative entry is, as a conservative trader, you tend to get into a trade at its first initial point. As an aggressive entry, you are trying to take a trade at a very early stage, even though you haven't seen a lot of conviction that the market is going to go in the direction of your anticipation. You want to take the first extreme points in the market as your entry zone. But as a conservative entry trader, you want to see more factors, more confluence factors showing you that yes, this trend is gonna go in direction of your anticipation. Why, as an extra conservative trader, you want to see the total switch of trend before you make an entry. So let me show you an example what I mean as a conservative entry. So let's go to our whiteboard right here. So let's take, for instance, right here we have an uptrend right here, and the price gravitate all the way right here, all the way right here, all the way right here, and all the way right here, and then it breaks down. It breaks below this structure right here. An aggressive entry could make an entry. An aggressive trader could make an entry right here. This is an aggressive entry, right? While a conservative trader will wait for a pullback, rejection. While right here is a conservative trader, right? While an extra conservative traders will wait for a test right here before going down. This is for extra conservative trader. So you can see right here, at this point right here, the first entry was made as an aggressive entry. So an aggressive entry, we have to place their stop loss above the last low high swing, because they made an entry based on this low high swing right here. While conservative traders would prefer to have their stop loss at this structural formation right here. Why the conservative traders, yes. Why the extra conservative traders want to make an entry when they can see a well-defined switch of structure. You can see that. So right here, the aggressive entry trader is trying to make an entry because the price could break all the way down and never come back. So aggressive traders, they do not want to miss the trend. They don't want to miss the trend, right? So this is where aggressive traders come in, whereby the conservative trader, they want to see more technical reasons to trade that pattern or to trade that setup. So a conservative traders want to see that this trend line, which have been acting as a support for price, should act as a resistance for price before they're going to look out for an entry. So they want to see this test right here to prove this trend line has been broken and it's now a new definite no with potential resistance for price. So they will make an entry right here so that price can go down. So sometimes an aggressive trader could be right, whereby the market keeps on going down and never give you a retest. Like what I did on the USD Canada, I told you guys I was looking at how I initiated a sell limit order. So I was trying to make the conservative entry, but the aggressive traders, okay, let's check the chart of the USD Canada so that I can give a better explanation right here. So let's check the chart of USD Canada. Let's go back to the chart of USD Canada and I can show you an example of what I meant right here. So let's go to the day chart. So on this price chart right here, let me show you where a lot of traders would have made an entry. So based on this day chart right here, let me show you the zone whereby aggressive traders would have made an entry. So as an aggressive trader right here, the zone which an aggressive trader would have made an entry would be at the close of this bearish bar right here. This is for the aggressive entry. An aggressive trader would have made an entry on at the first break of structure right here. This is an aggressive entry. While conservative trader, which I did, I traded the retest of this setup. This is for conservative entry, right? Whereby the extra conservative trader would have made a retest, would have made an entry right here. Extra conservative would have made an entry, a short entry right here. So the aggressive entry right here do not want to miss this rally. So if you are going to be making an entry right here as an aggressive entry, you need to know how to set your stop loss. So as an aggressive entry, the best way to stop your stop loss right here would be high right here. Because as an aggressive entry, you don't know, maybe the price will keep on going up and not give you a retest. There are a lot of times where the market will break down or break up and never give us a retest whereby conservative or extra conservative, it just means the rally. So as a conservative trader, I initiated a sell limit order right here. You can see that. And after the price made a pullback, I was able to get into the market as an extra conservative trader. So as as a conservative trader. So as a conservative trader, I'm trying to reduce my risk. I want to get in at a better price offer. I want to increase my profit ratio. But as an aggressive entry, they are main concerned. They do not want to miss the rally. They do not want to miss the setup. So they have to see if they can have a medium whereby they can target at least 2 risk to reward ratio, they'll get into the market. While as an extra conservative trader, they want to see that the market has changed totally. So as an extra conservative trader right here, you want to see this level has been cleared, a retest has been occurred. Now you want to flow with direction of a trend. So this is an example right here. So of all this setup right here, the most risky one is the aggressive entry, because most times the market will break down and then continue and reverses up trend. So let's take an example what we had right here. For example, what we had at the left hand side of the market right here, you can see when price broke the, I want to show you guys an examples of where market broke and then the market went down. Okay, right here. So let's take an example right here. As you can see in this market right here, we have a resistance structure right here. This was support for price right here. You can see that. Now let's zoom in on this price chart so you can have an idea. As you can see, this was a resistance for price right here, and we got it as support right here. You can see that. The aggressive entry trader made their first short setup right here, and the market precipitated all the way down. Now, let's view this chart properly. As you can see, when the aggressive traders made their first short entry right here, you can see the market never made a retest. So, conservative traders and the extra conservative traders missed this rally. They missed this trade setup right here. So, the aggressive traders were right here, and they shot the way down. So as an aggressive trader, you have to analyze your risk. If you are making your first entry right here and to the next support structure right here, you have to look out for a way whereby you'll be able to make at least minimum of 2 risk to reward ratio, right? Which was possible right here. If you are making an entry right here and then having your stop loss at the extreme high of the previous bearish candlestick, this is right. All right. So as a conservative traders, you would have missed this rally right there. So the conservative traders would have loved to make an entry at this structural formation right there after the retest of this broken structure, and they make their short entry right there, place their stop loss above this high. Whereby the extra conservative traders would prefer to make their short entry after the breakout of this double top pattern, which tested this level structural formation right there. You can see that. So this is the ideology behind aggressive entry, conservative entry, and extra conservative entry, right? So most of the time, aggressive entry tend to trade momentum. They look out for strong momentum in the market. They look out for liquidity before they make their entry. While conservative traders want to see a retest, a pullback, a retracement. While extra conservative traders sometimes are concerned with the switch of market structure. They are majorly concerned with the switch of market structure, right? So that is the ideology, the idea between conservative, aggressive, and extra. So in this USD Canada right here, the bar right here is for the aggressive traders. That was the bar which closed below the support structure on the Friday. Aggressive traders made their short entry right from Friday on the 24th of November on this asset, right? While the conservative traders waited for a pullback, which I did, right? While the extra conservative traders made their short entry on the 4-hour chart on the pullback. So the aggressive trader made their entry on 24th of November. The conservative trader, which I belong to, which I traded. We made our entry at the pullback on the 27th of November. That was on Monday. Take the dip, check, make sure you know the difference. Aggressive entry was last week, was on Friday last week. The conservative trader was on Monday this week. And the extra conservative trader was yesterday, Thursday. So you can see the difference right here. So these are the ways in which these traders approach the market, right? So that is all about aggressive, conservative, and the extra conservative, right? Now let's check on the Euro Canada. So once you're checking on the Euro Canada, we get on that. Let's navigate all the way down and check Euro Canada. So based on the Euro Canada, what we have right here now could be a short entry for aggressive entry. You can see this is a strong bearish breakout. So this could be a trade for aggressive trader. But take note, it takes 2 points to construct a trend line, right? It takes 2 points to construct a trend line, but it takes 3 points to confirm a trend line. So as an aggressive traders, they could make their first entry right here. But if you want to make a first entry right here, you have to study market trend as well. Because you are aggressive trader doesn't mean you just have to jump into the trade anyhow. There are different factors you have to combine, right? First, we have the higher high swing right here. We have the low swing right here, low swing right here. Price broke out of this low swing right here. So this trend line could still act as support for price. So if you're going to be shorting all the way down right here as an aggressive entry, it doesn't really make sense because your risk to reward ratio right here is not favorable. If you're going to be making your entry right here, this trend line could act as a point of hindrance for the market to go all the way down before it bounces up again. So at this medium right here, an aggressive entry is not the best approach. If you want to make an aggressive entry, you must have enough space, enough room for your trade to germinate for the minimum of 2 risk to reward ratio. So if you want to be making an aggressive entry right here, it's not the best thing to do. So the best way to approach this market right here is to implement the conservative entry. Conservative entry. So as a conservative entry, you want to look out for a pullback and a rejection for a downtrend. So as an extra conservative trader, you want to look out for a retest of a new low high swing before you make your entry, right? So these are the ways you're going to approach this asset right here. So that is my view on euro paired against the Canadian dollars, right? And as well, it takes 2 points to construct a trend line, but it takes 3 points to confirm a trend line. So whenever you try to trade the third breakout of a trend line, the third test of a trend line, usually the breakout of the third test of a trend line usually could lead into a trap in the market because you have a trend line right from right here and the right here doesn't mean maybe this is a trend line. This is not yet a validation that this is a trend line. Of course, you can combine any swings highs to any level in the market and construct a trend line. For example, you can connect this high right here to this high right here and connect it as a trend line. You can connect this low right here to this low right here as a trend line. You can connect this low right here as a trend line. But it is not yet verified as a trend line. For a trend line to be verified, it must have at least 3 touches, right? For a trend line to be verified, it must have at least 3 touches, right? Right here, you have the flow of market from this structure: first test, second test, third test. This is the second test and this is the first test. This is not yet a verified trend line. This is not yet a verified trend line. For a trend line to be verified, it must have a third rejection. Once it has a third rejection, then this is a verified trend line. But whenever it has just 2 tests, it is not yet a verified trend line. When you have this 1, 2, this is not a verified trend line, right? This is not a verified trend line. So market could get right here. If you are trying to make your entry right here, the market could do what? Break below and continue the market all the way down. Alternatively, if you are trying to short after the first breakout right here, the market could go up and continue the uptrend rally. So which means if this should occur, your trend line is not validated. You have to reconstruct the trend line, right? So these are the ways you use trend lines in the market. And this is why most traders believe or think trend line is not a reliable trading tools. The reality is you have been using trend line the wrong way. So based on what I have right here, I haven't yet categorized this trend line as a real trend line, because the markets could still gravitate all the way up and move up. Now, I have a view of this trend line. For those who treated this line right here as a trend line and who try to make an entry right here now, they are currently in a losing position. Likewise, those who want to trade this trend line, whereby they see this as a potential break, it's not yet a potential break. We have to see a test of this structure and a rejection. We have to build confluence factors. Someone said, so sir, but it is like if we consider this trend line as a zone, we may get the 3 touches. Before you consider a trend line as a zone, it must have at least 3 touches. So this is not a trend line on the day chart, but you could have maybe a verified trend line on the 4-hour chart. So let's check the 4-hour chart. So here on the 4-hour chart, do we have a test of price 3 times? Right here is the first one. We have a 2. Right here, price broke out. So this is not yet a verified trend line on the 4-hour chart. Likewise on the day chart. So the key idea right there is before you're gonna trade this rally right here, you have to build confluence factors. Traders, you need to understand the importance of building confluence factors in trading. Confluence factors will help you to avoid a lot of traps in the market. There are a lot of traps in the market than real setups. Not until you understand this, you will always be trapped in the market. Okay? So all what we have right here now, if I were you, I'm not going to be looking out for any trade setup right here. I'm not going to be looking out for any trade setup right here. I want to be looking out to see how price is going to react to this structural formation, because this was a resistance structure right here, a resistance structure right here, a support for price for the neckline right here. So I still want price to give me a definite reason right here that this level right here has been broken up decisively, and this is now a new resistance for a more downtrend. So that is the best zone. So if you want to be making your entry right here, you have to think in terms of risk. What about the dynamic support we have right here? If you want to be making your entry right here, right, where will you place your stop loss? If you want to be making your entry right here, the best zone to have your stop loss will be at this high. Yes, because you are trying to take the switch of trend. If you are trying to take the switch of trend, you have to make your trend, your stop loss at the point whereby the market has to invalidate your trend. This is the best way you set your trend line right here. You set your stop loss. Like I told you guys, don't ever try to place your stop loss based on your point, based on your pain level. If you want to place your stop loss at this structural formation right here, there's a higher chances price could gravitate all the way up, form a low high swing, cut your stop loss up, and then continue all the way down, right? So the best zone to have your stop loss, if you want to be making your entry at the first breakout right here, is you must have a wider stop loss. And if you are having a wider stop loss, you are increasing your risk and reducing your profit ratio. So this is why you need to look out for a pullback so that you can reduce your risk. So if you are making your first entry right here now, based on this pattern breakout right here, to this trend line right here now, you don't have enough room for 2 risk to reward ratio. The room you have right here is like 0.5, which is not favorable, reasonable in terms of risk to reward ratio. So if you waited for a pullback and you have a strong rejection structural formation right here, then you could find a way to move your stop loss all the way down, whereby you try to treat this rejection point as a low high swing, so you'll be able to have the minimum 2 risk to reward ratio. So this is how you approach trade setup. And if you want to be looking out for a short trade on euro paired against the Canadian dollar, that means you are shorting euro against Canada. And if you are shorting USD against Canada, then you believe USD is weak and Canada is strong. Likewise, if you are shorting Euro paired against Canada, you believe Euro is weak, Canada is strong. Now, what about Euro paired against USD? What is your view about it? Is the Euro stronger than USD or USD stronger than Euro? You have to find this out. That is if you have a trade on USD paired against Canada. So this is why sometimes before you take minor currency pairs, you have to think about correlations. You have to quantify the strength of any minor currency pairs you want to trade. So if Euro will be going down, it means Canada is stronger. The question you need to ask yourself is Euro going down against USD on Euro USD currency pairs? So you have to give answers to this. Or is Euro going up against USD? So these are the things you have to look out for. So if Euro is going down against USD, then it means USD is stronger than Euro. So this is based on one of the ways you have to combine currency pairs, currency correlation if you be trading minor currency pairs. And this is where I always advise beginners to stick to USD currency pairs. It is easier to trade USD currency pairs as a beginner. When USD is weak, you know any currency paired against USD has a tendency to go in a downtrend. When USD is strong, you know currency that are paired against USD when USD is strong, you know currency pairs against USD has a probability to go in a downtrend. And when USD is weak, currency pairs against USD have the ability to go in an uptrend. So it is easier to trade USD currency pairs unlike when you want to trade minor currency pairs. Because when you trade minor currency pairs, you are trying to get into a more complex market. And that is why it is easier to trade gold. When USD is weak, you know gold has a tendency to move in an uptrend. Gold has a tendency to move in an uptrend when USD is weak. And when USD is strong, gold has a tendency to move in a downtrend. The same way to silver. Right? The same way to other assets paired against USD. So that is my view. Once you've mastered major currency pairs, then you can now start looking out for a way to study minor currency pairs on how you can play them out. Right? So guys, these are what I want to share with you. So let's go through the asset I have on my list. First, I have the commodity market. I have the sugar. No, I've been monitoring the sugar, and I told you guys I have a narrow wedge. This narrow wedge has been broken. So the key level structure was being broken. That was yesterday. The key level of the 26.661, and the price is currently at the support structure of the 25.56. The reason why I ignored this trade was I was actually looking out for a pullback. If you can see a pullback, but that wasn't a pullback. Price keeps on breaking out down. So that is your sugar, right? So this level could act as a point of hindrance for the base to break more down because it was a support structure right here, and then likewise a support structure right here, a broken resistance structure right here, a resistance right here, a support right here. So this level could act as a support for price. So that is what I have on sugar, right? If you want to trade sugar, you can check out my recommendation, my brokerage recommendation. Someone said I have a question. So Ajibola, you can go on with your question, ask your question. So next on soya bean, this is what I have on soya bean. The market is in a downtrend, and we have a trend line right from this low all the way up. So we have the third test of this trend line. We have the first swing low right here, second swing low right here, a bullish engulfing bar at the test, and we have a close of price below this bullish engulfing bar. So this is a failure swing of bar. So this is a failure swing of bar trading strategy. So you could, if you are a trader in the commodity market, you could be looking out for a short entry on soya bean, and they have your XL right here, and the target all the way down. Okay, so the strategy right here is called failure swing of bar. This is a failure swing of bar because a lot of traders actually wanted or placed is buy limit or long entry because of this bullish engulfing bar right here. So a lot of stop loss orders have been cleared right now, and a lot of traders actually wanted to long this morning candlestick right here. And the reason why a lot of traders wanted to long this bullish engulfing bar was based on this key level structure resistance right here, a breakout of this structure and the retest. So this is a failure swing of bars trading strategy. This is a very powerful trading strategy. So This is why I will be looking out for a possible short entry at my XL right here on soya bean, and I target all the way down to the TP low structure right here. So if I'm going to be doing that, I'll be having to place a entry XL all the way down. So that's going to be 3.2 risk to reward ratio. So that is the what I can see on this asset. So if you're a trader right here, you could be looking out for an entry, right? So that is my view. So this is not an investment advice. This is just based on my technical views, right? As a failure swing strategy. And the next right here is I have the orange juice. So based on the orange juice, I can see a potential switch of market structure. So for those of you, this is for those of you who trade the commodity market. So let's zoom in. I'm going to clear off all these trends right here. So let's zoom in on the day chart. So based on the day chart, this is what I have. I have a swing low right here, and I try to connect it all the way down, and then I fired it all the way up. Fired it up. Can see that. So I have a break of this trend line all the way up, and then I have another low trend line right from these structural formations right here, and I try to capture it all the way up. Can see that. So I'm currently monitoring this asset to see how price is going to react to this trend line right here. Maybe it's going to be a confirmation for more uptrend or maybe a downtrend. So this is a complex pattern. I just want to let you guys know if you trade the orange juice. So I'm monitoring the orange juice, right? But I haven't yet seen any confirmation right here because the market is still uptrend. And again, I want to share with you US oil. Let's go to the oil market. I told you guys yesterday, I said I'm not yet giving up on this asset. I told you I had a losing trade yesterday on the US oil. Someone said you need to verify your trading account, right? You need to verify your trading account. So try to verify your trading account. So right now on the day chart, this is what we have. And based on the 4-hour chart, like I told you guys, the inverted head and shoulder is still active. Like I told you guys, we have the left shoulder right here, inverted head, and the right shoulder right here, and we have the neckline. I'm gonna draw this right public, and we have the neckline structural formation right there. So the inverted head and shoulder, left shoulder, inverted head, and the right shoulder and the potential neckline. Although the right shoulder right here is yet to be formed, so we are still hoping for price to gravitate up to break right here and continue the uptrend. And then again, I can see another potential setup right here, which I want to share with you guys. I have another potential setup right here. So right here, I can see a potential what we call an ascending triangular formation. So let's clear this off. So based on what I have right here, I have the resistance structural formation right here, and I have the trend line right here. So you can see that. So if price can gravitate all the way up, price could have a support swing right here, and then gravitate all the way up and break out, make a test, and then up to the uptrend on US oil. So these are what I have on US oil. So if you're a trader on US oil, you could keep on monitoring this asset to see which way the market actually want to break to, right? So that is my view on the US oil. So guys, if you're a trader and then you are looking out for trade opportunity, you could pay attention to the oil market. Look out to see how price gonna react to the structural chart patterns I constructed on this rally, on this setup. Okay, so we have another resistance structure right here, which you can as well tag as a potential structural formation. So you can get this off right here, get all this off, get this off, and then you have this at the low structure right here. So this is what we have on the US oil. So let's keep monitoring to see what price has to offer. Maybe price is going to continue the way down, or maybe price is going to find a rejection. All right, guys. So this is what I want to share with you on US oil market. And next is platinum, right? I'm still be monitoring the platinum. Let me share with you what I have on platinum. This is the commodity market as well. I know most of you haven't heard about the world of platinum. Platinum is also in the commodity market. So what we have on the day chart, we have a descending channel. So let's get all this trend off right on our chart. So we have a descending channel right from the swing lower high right here to the swing structure right here. We connect it all the way up, and let's connect our trend line right from this structural formation right here. Right. first I try to capture the swing low right here. So I ignore the upswing. I'm trying to capture the swing low right on this price chart. So the swing low right here, I want to capture the 3 swings. So the first swing I captured was the 3 swings, this downtrend, lower low, lower low, and lower low. So I'm gonna use the swings at the low right here to construct my lower band of my channel. So which means what I have right there, this is what I have right here. Okay, so based on what I can have on the test of first test, second test, third test. Remember, it takes 3 points to confirm a trend line. So I confirm this trend line based on channel chart pattern, and I treated this one right here as a first low high swing, right there as a first breakout. So it's a low high swing, right there as an hiding low high swing test, right there as a potential test right now. So this is what I have on platinum. So if you are trading platinum, you could focus your attention, could be monitoring this asset as well. So what I'm going to look out for right now is price going to break all the way down and then continue all the way down. So this is what I'm looking out for on platinum. So take note of the key level structure, which acts at the price of the 902.385. As well, if you are shorting USD paired against the Canadian dollar, you have to be careful. If you are shorting USD, then it means you believe USD is weak. So any currency paired or any asset paired against USD has a tendency to rise up. So this asset right here could break up against the USD because XPT is paired against the USD, right? So that's my view on the USD, and that is why you can see gold, silver are all bullish against USD, because currently right now the market sentiment is USD is weak, right? So that is my view, right, on platinum. And let's check out gold and XAU paired against the USD. So let's go through gold. This is what we have on gold right here. Gold is still in an uptrend rally. All right, so this is what we have. The market still continue upward. So the dynamic rising trend line is still acting as a support. You can see right from this structural formation, we have this trend line. We have the validation of this trend line right here. This is the validation of this trend line. This was the second test. It takes 2 points to confirm to control the trend line, but it takes 3 points to confirm a trend line. So let's hope this level gonna act as a definite support for the continuation upward right here. Alternatively, if this level should fail to hold as a support and the price break out the price down, price still need to clear off the higher high swing of resistance, which could act as a support for price at the $2,010. So this is a psychological level. You have to pay attention to this level, right? So this is my view on the gold, right? So currently right now, gold is still in a bullish market structure. And let's check out silver. What do you have on silver? Based on silver, I think I have a market of silver right here. Let me show you what I have on my other chart right here. So based on silver, this is what I have on silver. So this is silver right here. You can see silver, we have a low high, we have a low high swing right here, low high swing. On the right here, we have a price at resistance structure. So price is currently finding the difficult right here. So the question right now is price going to make a breakdown to the downside. So since USD is currently weak in the market, if you want to short silver against USD, you have to be very careful. And this is one of the reasons I don't like to trade on the Friday, because market sentiments could just change suddenly over the weekend. So if market is going to make a pullback, the rising trend line we had right here needs to be confirmed. First right here, this is the first test of this trend line, the second test of this trend line. So let's hope price going to make a pullback right here, maybe to confirm the third trend line of this test of this rising trend line for a more bullish rally on the silver. So that's what I want to share with you guys this week. And I am looking out for trade opportunity next week. This week I am not going to be making any trade. I'll just keep on adding to my short position. Right, guys, thank you for your support. So if you have any question, any difficulty in relation to trading, you guys can ask me in my Telegram group. You can send me a private message or send a message directly in the Telegram group. So Ajibola, you can try to contact me on Telegram if you have any question. Right, I can see you drop your messages right here. For privacy concerns, for your privacy, it's better you send me a message on Telegram, and then you can private message me as well on Telegram, right? Or drop a message in the group, and then I will private message you. So thank you, viewers. Thank you, guys. So we're gonna be right here again Sunday 9 p.m. GMT +1 to talk about the market before the market opens for the new week. And Happy new month to you all, and I wish you a wonderful December. Wish you a happy weekend. So take care and please stay safe, right? Thank you.